So now it's my pleasure to introduce somebody that's very close to me, happens to be my first cousin, actually. Kurt Gerwitz recently moved to Denver and is in business development executive for AFEX. And he certainly enjoys helping out with the international business community, just like I do. It must run in our DNA, Kurt. But let me just introduce his topic. It's called Dedollarization. What's the status of King Dollar globally, and what are the implications on trade? Kurt, we look forward to hearing your presentation.
Hello and welcome. I'm Kurt Gerwitz. I've been working in international finance and investments for more than 10 years. I got my MBA from Tulane University in New Orleans, from where I moved up to Denver about a year and a half ago. I'm on the board of the Global Chamber of Commerce, and I volunteer with the World Trade Center Denver in a couple ways. One is with the Global Accelerator Program. The other one is that I teach foreign exchange to the Global Finance course. Let's get started. Let's take a quick look at the agenda. We're going to address the question of, is the US dollar a global currency, and how? To that end, we'll just do three things. We will look at some economics around trade, debt, and reserve currencies. And we'll look at other contenders for the status of global currency, and we'll explore de-dollarization and talk about what's going on there. And then finally, three, we'll discuss the currency effects of our current economic crisis and present pandemonium. You ever wonder how it is that the U.S. is so powerful? How it is that we can sanction foreign countries? If we say don't trade with Iran, why do they listen? Is it our military? Sure. But how do we even afford our military and all those flat screen TVs? And more interesting, perhaps, could we lose it all? So let's take a look at this. More people live inside this circle than outside of it. How is it that we in America claim 25% of GDP with only 4% of the population? Take a look at this infographic. It shows the wealth that exists and who has it. We can see that the US here in red, China coming up here in blue, and all this green over here is Europe, looking relatively equivalent. Hey, I get it that we won 2 world wars, coming in late enough that our strategic rivals had destroyed each other, but that ended in the 1940s. So yes, we have the world's preeminent currency. Perhaps some countries might think that having their own central bank might just be too expensive, and it's just cheaper to use the dollar. So I looked up a list of countries that are using the dollar. Here's that list. Not that impressive to me personally, so I thought maybe a bunch of countries are using the dollar, but it's not their official currency. And so here's that list. So it's a little bit more, but it doesn't give me enough. It does not satisfy my curiosity. So what makes a global currency comes down to these three things: trade, debt denomination, and reserves. Reserve currency seems to be the most important, though they are all very related, interconnected. Foreign exchange settlement should be thrown in there too. It's to get the price of a cross pair, one triangulates through the US dollar. So it's no surprise that 88% or more of foreign exchange action goes through the US dollar. Here in trade, we'll talk about commodities, petrodollars, and jurisdiction. Commodities such as gold, coffee, oil, grains, they're all priced in and traded in US dollars. And this is a big deal. We call those dollars that move out for oil petrodollars. They may not be everything to the story, but $711 billion is how much net oil export revenue from OPEC was in 2018. And that's only part of the 42% of all the transactions that are in US dollars. So again, here we are, 4% of the population and over 40% of trade. Maybe 40% doesn't sound like it's that big, but it's the largest chunk. The euro has 32.6%, and we're looking at the Chinese yuan at only 2.1%. The dollar's share as an invoicing currency is 3.1 times its share in world exports. That is, many non-US exporters are invoicing their exports in dollars. For example, Japan and England. Their currencies are reserve currencies, yet only 40% in the case of Japan, 51% for England. Their exports are invoiced in their own currencies. So 60% of Japan is done outside of the Japanese yen. 49% of England is done outside of the Great British Pound. In the United States, in contrast, over 90% of imports and exports are in USD. This dollar invoicing is not just about commodities like oil or copper that are denominated in dollars, but applies to a much wider set of goods. As someone who has worked in trade finance, let me tell you that there are really good reasons to explore using more than just the dollar at the individual company level. For one, if your counterparty understands currency and you don't, they are at an advantage. You can easily learn how much they're charging you to take on that foreign exchange risk by asking them for an invoice in both currencies. These volumes reflect the status of the dollar, but there's real power in the jurisdiction. Dealing in dollars means that an involved bank probably has a relationship in New York City and that it's connected to the SWIFT system. The United States claims jurisdiction over all these transactions then. So many of these global payments are going to get checked against America's list of bad guys. This is the main way that we enforce economic sanctions. Obviously, it's pretty important to global power. Okay, so that's trade. 40% of trade is done in dollars. That includes commodities and gives the U.S. power of jurisdiction. Okay, we'll do debt next. Debt becomes really important to the story here. There's global demand for U.S. dollars. Looking for stability when making loans, lenders are going to choose the U.S. dollar. It's stable, it's consistent, it has meaning. The 10-year payment needs to be as stable as possible. The IMF, for example, lends in dollars. Non-American banks had $27 trillion in international liabilities denominated in foreign currencies. Of that, 18 trillion of that was in US dollars. Again, the largest portion. Total global debt denominated in US dollars is about 50 trillion. The majority of this is domestic inside the US economy. 11 trillion of that has been issued to non-banks outside the US, including developed and emerging markets. So we've got about 40% of the world's debt issued in dollars. Again, 4% of the population, 40% of debt issued in one currency, the US dollar. Okay, so that's debt. Trade is at about 40%, short term. Debt is at 40%, and that creates long-term demand around the world for US dollars. Which brings us to the most important of the three, reserve currency. Arguably the most important piece of this puzzle to understand the status of the USD as global currency. Why do central banks outside the United States hold on to other currencies like the US dollar? It's easy enough to imagine how dollars accumulate to other countries. We're here in the US, buy more stuff than we sell, so more dollars flow out. You might be surprised to learn how foreign countries want to hold US dollars. Why would you want to hold a currency you can't use in your own country? For trade, obviously. A natural hedge is when revenue and expenses are in the same currency. Think of buying oil or other commodities like food. Sounds pretty important. Also can be used to pay off dollar-denominated debts that we just described. So for trade is one, for diversification, because the dollar hedges against their own currency's fluctuations. Maybe the best way to understand this question is to ask, why do you as an individual, want dollars? To buy stuff, for safety, for security, to earn more dollars. Now, if a country exports a lot, it's going to collect, what it collects is it gets gathered in its reserves. So if a country exports, what it collects can stay in its reserves. What countries do you think export a lot? Well, let me pull up a visual showing the amounts of reserves held by various countries. The bigger the size of the image of the country, the more the reserves. In this visual, we're looking at all reserves, not just US dollars, but it makes sense that the exporting countries of Asia are collecting these reserves. What percentage of this is in what currency? If you said 40%, you're following the pattern, but that's wrong. It's 62%. So 40% trade, 40% debt, 60% foreign reserves. Let me show you that breakdown of what currencies are held in reserves like this in two different charts. The green is the US dollar up in the 60s. Blue here is the euro, a bunch of others at the bottom. So this chart shows us, number one, that the euro has a role, and number two, that these proportions have been pretty steady through time. Now let me show you my most popular graphic. Way better than a regular pie chart, am I right? The dollar here is at 62%, euro here in the 20s, other major currencies like Japan, Australia, and Canada down here. And here at 2% is the Chinese yuan. We'll talk more about that too. Okay, another leading question here. Where would these countries park dollars? In treasuries, right? So let's look at who's holding our treasuries. This chart shows us that, so maybe it sounds scary that foreigners are holding our debt, but this chart is showing us that only 30% are held by foreigners. In this next pretty slide, we can see what internationals are holding these treasuries. That it's nice and diversified, and it should not surprise us that Japan and China holding the most with over $1 trillion each. Asian exporters with conservative cultures, right? So a few points can be made here. Every name in here is on Team Dollar. Everyone in here is holding tens to hundreds of billions of dollars. They would all want a strong dollar. And as exporters, they want their currency lower to make exporting easier. Nonetheless, point here is that there is quite an appetite for US dollars and held in treasuries. And this demand keeps our borrowing costs cheap. Ironically, we're doing the world a favor by creating our fiscal and trade deficits because we're giving them a chance to hold the treasuries. We're supplying the demand. Another thing about this demand, let's look at not only why the world wants dollars, but when. Dollars are the safe asset of choice. It's a safe haven. Analysts have observed this global investor behavior called risk on, risk off. When the world feels stable, when investors feel like they're staying on solid ground, they will invest in riskier assets. But if anything rocks the boat, then they move quickly to safety. This is simple enough, but there's a twist here that shows a unique situation of the US dollar. Whereas any other country showing risky behavior would get disciplined by the market by capital leaving, the US, in fact, gets rewarded. There's my favorite story to explain this. In 2014, Ted Cruz is on the floor of the Senate, up all night, reading Green Eggs and Ham in some kind of filibuster. He's threatening technical default in the United States. And the world looked at the chaos that could happen, the country that caused it all, and they said, we need to buy dollars. It's good to be king, right? You would expect the opposite to happen. The opposite would have happened for any other country. Okay, so there we have it. Trade, debt, and reserves. Dollar, dollar, dollar. The US dollar is not officially a global currency, and it's not ubiquitous, but it clearly has the highest status. Before we get to current events, I want to dive a little deeper into our understanding here. Let's ask, can it stay this way? And look closer at why is it this way? Is it trending? How did the dollar order last for so long? Will it be this way forever? Here's an academic from BC describing his 4 pillars of the dollar order. I humbly would like to add some nuanced distinctions to what he says. He says the rise of the dollar order was built on these 4 pillars: robustness of the economy, widespread belief in American model of finance, wealth of U.S. financial institutions, America's leading role in international affairs. So let's break this down. Robustness. Great. Yes. We have a diverse economy, and boy, are we going to need it after this corona mess. Okay, next 2. Widespread belief in the American model of finance and wealth of U.S. financial institutions. Okay, so what's behind this belief and the wealth? The rule of law, separation of powers, checks and balances, and integrity. It turns out it's very important that our Treasury legally cannot distinguish between classes of holders. So if you're an international holder, you have the same rights as an in-country national. Here's my own list that I've got from my readings. The world's reserve currency needs to be liquid, stable, have depth, have safety, have tremendous size. It needs to be in demand. And check this one out. It's going to get measured on its role in moderating economic shocks. And finally, we get to this great phrase I came across, exorbitant privilege. There's considerable convenience from not having to convert and not having to hold FX reserves as insurance. This author estimates that America benefits from 3 to 4% increase in standard of living that comes to us from having the global currency. This is why in the 1910s, the Fed wanted to internationalize the dollar. And yes, World War I started to really help that, and it was finalized by World War II. So in a bit, when we ask if a currency could take over another one, the answer will be yes. Okay, but how does this work? How do we live better? Remember that China has incentives to keep the dollar strong. In addition to the fact that they're holding dollars, China is also on this path of development known as export-based. By buying our treasuries, one thing they're doing is funding our trade deficit, which is 6% of our GDP. So we get to live beyond our means, and they'll finance that. In exchange, they get double-digit growth from export development. Because of this global demand for dollars, there's this idea called seigniorage that we could just print a dollar at the cost of printing a dollar. And because there's demand, we could buy goods and services for that. So this is an exorbitant privilege. The next question becomes, does this exorbitant privilege come with exorbitant responsibilities? Being the king also comes with a risk of being beheaded. Like the expression that the tallest blade of grass gets cut first. Here's a quote. An emerging coalition of revisionist countries, rogue governments, techno-visionaries, and sanctions entities buttressed by innovations like blockchain and 5G are working to push the dollar off of its reserve currency throne. Dedollarization has been called the most seminal yet least noticed developments in international affairs. After 9/11, U.S. foreign policy started using dollar control. There's a headline here showing the U.S. threatened to remove our troops from Iraq if it comes off of the dollar. The New York Times argues that the U.S. increasing reliance on economic sanctions to solve foreign policy problems is fueling concern that the U.S. is abusing its financial power and prompting some governments to seek ways to evade American measures. We know that India is trading with Iran, and Europe is openly trying to figure out a way to. They created the Instex, the instrument in support of trade exchanges. Check this out. Mnuchin says the reason why sanctions are so effective is because the dollar is the reserve currency of the world. Other currencies may not like adhering to our sanctions, but because the dollar is the reserve currency and their banking systems are attached to dollars and dollars are a major component of trade, that's why people have to cease activities with Iran. He acknowledged that over a long period of time there was a risk that the rest of the world could shift away from the dollar as the reserve currency and that the United States must be responsible with how it wields sanctions. But he suggested that for now, other countries have little choice but to comply. And it's not just sanctions, the use of or perceived abuse of power, but protectionism, and it's not even just jealousy either. The global demand, remember, is for safety and predictability. The previous global financial crisis in 2008-9 was solely created by the United States. It brought the whole world down a notch. So it's no wonder why we see other countries wanting to diversify. Since 2011, China is gradually shifting from trade in US dollars in favor of Chinese yuan. It has made agreements with Australia, Russia, Japan, Brazil, and Iran to trade in national currencies. We see them liberalizing their control of the renminbi. It's opened yuan trading centers in London and Frankfurt, and it has tried to allow the yuan to trade in a wider trading range around a basket of currencies that include the dollar. In 2015, China and Russia appealed to the United Nations that the US dollar should not be in its position. In August of 2018, we saw Venezuela joining a group of countries that allowed their oil to be purchased in currencies other than US dollars. Iran obviously is also in that group. So we'll be testing the conspiracy theory that one way to get the US military to show up at your door and deliver some regime change is to discuss trading oil in anything other than the dollar. Obviously one of my favorite conspiracy theories. De-dollarization has been a scary word for decades and has not made much traction. China may dislike dollar hegemony, but they're not prepared to allow the liberalization of capital flows needed for the yuan to achieve true reserve currency status. China once tried getting some Middle Eastern oil producers to price their oil in renminbi by creating a futures market for in the currency. This idea was not rejected only because of politics. It was also rejected mostly because the market didn't want it. The traders didn't feel that they could trust the value of the Chinese currency. Check out the conclusion from this Australian academic paper. The campaign to internationalize the RMB from 2009 has been a failure. The U.S. approach can be characterized as benign neglect at best. The IMF data reveals the dollar's share of foreign reserves fell from the high of 73% in 2001 to 62% at the end of last year. So despite my chart that shows that it's consistent, it has come down from 73% in 2001. The primary reasons for the dollar's continued dominance, according to this article, are inertia and the lack of viable alternatives. I want to talk to you about those alternatives. To be clear, none of them are going to hold up. The euro in 2001 was looking pretty good. There was a time when we thought the euro was going to take over. I remember a headline that supermodel Giselle wanted to be paid in euros, and that rap lyrics were trending towards the euro rather than talking about the dollars. How's that for an economic measure, rap lyrics? Europe is divided with internal struggles. By 2004, we realized that they were not a contender against the United States. Since then, we've seen Brexit. We've seen the North versus South. Ironically, it was the great financial crisis that made it clear that the Fed is the world's central bank because of Europe's need for dollars. Here's the Swiss franc and the Japanese yen. They're pretty good with some of these qualifications. Now, they don't even want money coming in, though. They're net demanders of safe assets. They're not producers like we are. And most of these are too small, like gold. It's estimated you would need $24 trillion to have the depth of the currency. Some of that's the domestic economy, and the other part of that is the international economy. That's 3 times what gold could possibly do. I think crypto it could scale. It's too small right now. In conclusion, the dollar is far from perfect. Now, this is pretty much where my presentation would have concluded if I were giving this in January. But I want to jump into current events because I think it's relevant. The last crisis revealed the status of the liquidity and the demand for the US dollars. It set it as primary, kept it as primary. This one is doing it again. Our Buzz Lightyear Fed, to infinity and beyond, said that they will do whatever it takes. Here's a chart of the $6 trillion that they're buying recently. We can compare that to what the ECB, the European Central Bank, is doing. This shows that the EU just doesn't have as much of a need to print this money. Also, the Fed opened up swap lines with other currencies. The Fed is playing long ball and can better try to play to our long-term international goals. In conclusion, we explored U.S. economic power through understanding King Dollar. We now understand the power of the currency because of trade, from commodities through petrodollars, the jurisdiction, and the convenience. We understand the significance of the currency in global debt because of stability, confidence, convenience, and liquidity. We understand how and why the dollar is the world's reserve currency and it functions as insurance. And we understand the dollar is a safe haven asset, creating unique circumstances that reinforce its authority. We examined the weaponization of the dollar, efforts to de-dollarize around the world, and the failure of an alternative to rise to the occasion. Finally, we examined the current pandemic's currency pandemonium. Thank you for attending. We'll now go back to the live connection for Q&A.
That was incredible, Kurt. Thank you so much. Boy, you've got this topic just so you're so well versed on it, and thank you so much for sharing your expertise. We do have a question that came in here from our friend John Stoll. Will the massive recent CARES Act and other financial aid programs seriously hurt the future of the dollar? And you might have just addressed that, but could you shine some more light on that?
Yes, I love this question, but it's kind of hard. You have to tease out what we're even asking. Are we asking, is this crisis and our response to it, is that going to challenge the status of the dollar around the world? Or are we asking, is it going to make the dollar stronger against commodities, stronger against other currencies, stronger against gold? And so, so there's plenty to say there. The fact is, we're seeing the Fed print trillions of dollars, and we should be afraid of inflation. But inflation is also complicated. You get inflation in the goods and services that we all use, or what we've seen in the past Fed printing, which we never even got out of. We're seeing inflation in assets. That's why housing is so expensive, and that's why the stock market's so high up. So what we've seen so far with the crisis is that there's demand around the world for U.S. dollars. We've opened up these swap lines with other countries. That was, this gets kind of complicated. I won't go too deep into that, but it's proving itself yet again as the strongest amongst all the competitors. All the competitors are, the dollar's not perfect. We're going to see definitely going to see some disruption. And we have not in the past ever gone too far, but that doesn't mean we won't now. Because we're going to put our debt to GDP ratio over 100%, like 120%, but Japan's is at 240% or something. So I would argue it's going to be okay. It's definitely going to be different and challenging.
Okay, great. Hey, give us your opinion on what companies should do when they're invoicing, maybe foreign buyers. So they're selling goods internationally and they're invoicing. Should they invoice only in dollars, in multiple currencies? Give some advice, if you would, for our small businesses.
Yeah, my advice for small businesses is connect to an expert and have that very conversation. It's very simple, just to have the conversation about what do other currencies look like, and then you can see what your counterparties are doing. So yeah, you want to be sophisticated and understand what your options are. The simplicity of the dollar, it's nice, but it could be a trap.
Okay. All right. Well, in my year's experience here, I see most companies that I work with only using US dollars in their quotes. And while we see it's the strongest currency, I think there might be some other options to possibly save on some of the risk, as well as maybe even be more competitive in market. So I think there's lots of options. Glad AFEX is here. Glad you can help coach the companies that we work with. How can people get in touch with you?
They can email, Chris is a good place to start. You can email me, kgerwitz@afex.com, or even my personal email, kurt@gerwitz.com, or you get in touch with anybody at the World Trade Center Denver and they can get in touch with me.
Perfect. Thank you so much again for your expertise. Appreciate your support of the World Trade Center, and thanks for coming on today.
Thank you.
Great. All right. So